The largest overhaul of the federal student loan program in United States history was signed into law on July 4th as a part of Trump's One Big Beautiful Bill. Whether you have existing student loans or you will be obtaining student loans in the future, this bill has major impacts on how repayment works. Here's what you should know, no political commentary here, just the facts. Starting July 1st, 2026, all new federal student loans will fall under one of two repayment options. Number one, the standard plan. With this plan, you'll have fixed payments over 10 to 25 years, depending on how much you owe. Or number two, the repayment assistance plan, or RAP. Under RAP, monthly payments are based on your adjusted gross income, ranging from 1 to 10%, with the percentages increasing as your income increases. Notice I said adjusted gross income, not discretionary income. The minimum payment is $10 a month, and any remaining balance is forgiven after 30 years. That means plans like Save, Pay, Repay, IBR, and ICR, as well as others, are going away for new borrowers after July 1st, 2026. If you're already in one of those plans, you can keep it, but only until July 1st, 2028. After that, everyone, regardless of when you borrowed, will be placed into either the standard plan or RAP. If you don't choose by that deadline, it's my understanding that you'll automatically be placed on the standard plan. So what does this mean for you? If you're already in repayment, you don't have to switch right away. You can stay in your current plan through the first half of 2028. But if you're pursuing Public Service Loan Forgiveness, or PSLF, this is a critical detail. After July 1st, 2028, only payments made under the RAP plan will count towards PSLF. Now, I don't know your specific details, but I recommend figuring out what plan results in paying the least amount prior to forgiveness. That could mean switching to the RAP program prior to the deadline, or it could mean staying on your current plan for now. Just keep in mind that after July 1st, 2028, only RAP payments will count towards Public Service Loan Forgiveness. Now, the good news is that this bill did not cancel PSLF. If you are not eligible for PSLF, but you are eligible for forgiveness under one of the other plans, and that forgiveness will happen prior to the July 2028 deadline, it is my understanding that you can remain on your existing program and still receive forgiveness. However, if you do not receive forgiveness before that July 2028 deadline, those payments will not count towards forgiveness under RAP. In which case, switching after July 2026 but before July 2028 might be beneficial to you. It's at least worth looking into. I want to point out that this is my interpretation of the law today. It is entirely possible for these laws to change even prior to that 2028 deadline. Let's talk about some other big pieces of this bill. First, Grad Plus loans are going away for new borrowers starting July 1st, 2026. If you're already using Grad Plus, you're allowed to finish your program, but new borrowing will be capped. Second, graduate students will face new annual and lifetime borrowing limits. Master's students, $20,500 per year with a $100,000 lifetime cap. Professional students like law or medicine, $50,000 per year with a $200,000 total cap. If your borrowing needs exceed this limit, you might need to tap into private loans, which often come with higher interest rates. Third, Parent Plus loans are still available, but with new caps as well. $20,000 annually and $65,000 total per dependent. These loans are not eligible for RAP or PSLF. Fourth, deferments and forbearances are changing. Economic hardship and unemployment deferments will be eliminated by July 1st, 2027. Forbearance is limited to 9 months every 24 months. And finally, federal collections are back. If you default, wage garnishment, tax refunds, seizures, and even Social Security offsets will be reinstated in full. Now, discharges due to total and permanent disability or death will still be available, and those discharges are now permanently tax-free. This is a big relief for affected families. And again, under RAP, any borrower, public or private sector, gets loan forgiveness after 30 years of qualifying payments. So what should you do? Well, you don't have to do anything yet. New programs do not start until July of 2026, but now is a good time to plan. If you're nearing forgiveness under an existing plan, it might make sense to stay put if your loan will be forgiven prior to the July 2028 deadline. If you're on track for PSLF, switching to RAP by the July 1st, 2028 deadline is essential. If you switch to the standard plan, those payments will not count towards PSLF forgiveness. And if you're a new borrower after July of 2026, understand that RAP or the standard plan are now your only choices. Plan your borrowing and repayment accordingly. This bill reshapes the entire student loan system. It gives some borrowers more predictable payments, limits borrowing for graduate and parent loans, and changes who gets forgiveness and how. While a good financial advisor might be able to help you understand how student loan repayment plans could impact your broader financial goals, your best sources for personalized repayment guidance are your federal student loan servicer in the U.S. Department of Education. For more in-depth help, I recommend speaking with a certified student loan counselor from a nonprofit credit counseling agency, or using tools available at studentaid.gov. I'll put some of those in the description for you. Please click here for an additional video for 3 ways the One Big Beautiful Bill could impact your personal finances. And hit that subscribe button for ongoing financial education that empowers you. And as always, money is a tool, knowledge is freedom, and planning is power. I hope you have a great rest of your day.